Like, we're always trying to push the envelope to try to understand, how do we give our assets superpowers, right? Like, it's not like, oh, let me stand. How do we give our assets superpowers, right? Like, it's not like, oh, let me just.
Alrighty, so in today's video breakdown, I want to really tie in everything that we've been discussing and talking about in this community and really focus on something that was brought to everybody's attention yesterday. I don't remember in particular who talked about it, but it was this ideology behind diversifying your portfolio, having a stablecoin portfolio after this next bull market cycle that sits in the hundreds of thousands of dollars. Hopefully, we're all able to achieve that. That's just earning us passive income and rewards that we're able to, in a way, retire off of, in a sense of how much passive income it's making us. Before we get into that, I want to kick off and start today's video breakdown by setting the tone. This is a huge announcement from Nadine Chakar, the global head of the DTCC, digital assets. And she pretty much goes on to confirm now is the time to get into crypto, that this is not time to be sitting on the sidelines. This is verbal confirmation that she delivered when asked the question, what advice would you give to banks? And she says exactly this. So just take a second here and listen. This will set the tone for today's video.
Just sitting on the sidelines in this, just sitting on the sidelines in this evolution, as it's not an overnight thing. What do you have to say?
All right, your time is up, guys. Like, just get in there. The water feels good. Dip your toes in and get going. This technology is moving too fast. Like, I've worked in institutions all my life where I was told there's no benefit in being a first mover. We just want to be a quick follower, and there's some merit in that. But the time now has come to be a follower. The technology is moving too fast. Like, if you sit by the sideline for any longer, it's going to be really hard to catch up. Just get in there. Again, the water's really good. And I think you'll enjoy the ride. So please reach out if there's any.
Right. So that is coming from the DTCC that processes over $4 quadrillion annually and literally is the backbone of the U.S. financial system. Just gave verbal confirmation at a Stellar Development Foundation conference in 2025 from just a couple of days ago. Look, TradFi, get in now while you still can, because if not, you risk falling behind. That should be a huge wake-up call for any retail investor that's still skeptical about this space, especially considering what I'm about to show you guys as we continue through the remainder of today's video. So now we're going to be listening to other large industry leading experts in this space. One is this gentleman, Sanat Rao. Hopefully I'm pronouncing his name correctly. He stems from Monarch Asset Management Firm. They are a quantitative asset management firm in the digital asset ecosystem. And then we're also going to be listening to one of the biggest asset management firms, Christine Moy. She is one of the leaders at Apollo. And I really want you guys to focus on what these people are talking about, because for the first time ever, we're publicly hearing not only institutions like the DTCC come out and say, hey, get involved in crypto, but they're specifically talking about DeFi, passive income, looping strategies, earning rewards, turning your digital assets that are sitting idle into yield generating assets that are giving you the ability to literally retire off of your crypto portfolio and generate you consistent passive returns, compounding, growing those bags over a prolonged period of time, and having a zoomed out vision. And so this just goes to show the exact alignment that we've had over the past year and a half in the Wealth 28 Club, and how just aligned we are with what everybody else is not for some odd reason. Just look at this video breakdown as an example. It has 93 views. It is embarrassing considering that there's over 600 million people right now in crypto. And you go look at price prediction videos and they have hundreds of thousands of views and engagement, but knowledge and education like this is going relatively unnoticed, not here in this community. So listen to this gentleman here again, stemming from a quantitative asset management firm, talk about how we're going to be wanting to participate in looping strategies. And he talks about rehypothecating assets, lending, borrowing against them, rehypothecating the digital assets, and then doing it all over again to loop and get access to higher yield. Take a second and listen.
Needs to compensate for the risk, right? And which is why what ends up happening for us is we end up looking at real world assets, and almost always we are looking to loop it, right? So, and I know it's not a security question. So in fact, we're actually adding more risk, right? But we like to loop it so that the yield is higher than what it would be traditionally in just from the asset itself, right? And looping means basically depositing, rehypothecating the asset, depositing it somewhere, borrowing USDC against it, and buying more of the same asset, and so on. And so for us,
so you have a financial institution sitting on stage now in 2025, going over like word for word pictures that we have, infographics that we have in the CYPRX Well 28 Club, going over these strategies, right? Lending out your assets, borrowing against them, rehypothecating the asset, putting it back into the lending position, and repeating the cycle. These are all things that we've been talking about for some time, and now we're seeing institutions really start to catch up and publicly talk about this. The momentum is going to be huge, especially as central banks all over the world continue to debase and devalue their currencies, and at the same time, slashing interest rates, hiking up institutional demand for yield generation. Honest to God, DeFi is going to be one of the primary niche categories in crypto, in my personal opinion, that sees substantial price appreciation and increased institutional adoption, as the search for yield is going to continue to increase over a prolonged period of time. So that is from this gentleman here. Now, if we come over here, this is Christine Moy from Apollo Asset Management, over $700 billion in AUM. And I want you guys to really pay attention to key vocabulary. She specifically talks about the ability to give your digital assets superpowers through yield generation. And that word, that terminology, superpower, is literally printed in all caps on this project that we're going to get into today, that allows you to condense all your lending and borrowing positions into one platform, so that way you can use all of your lending and borrowing positions as collateral in a condensed portfolio. So if you have a position, let's say, for example, in the future on Metallicus, if you have a position on Aave, if you have a position on Jupiter, if you have a position on Camino, if you have a position on Drift Institutional, this platform isn't integrated with all of the protocols that I just mentioned, but maybe in the future it will be. Bottom line is it allows you to take a loan against all of those positions in a condensed portfolio. And we'll get into that here in just a second, but just listen to what Christine Moy here says. I don't want to get too ahead of ourselves. Check this out.
Sort of shift in systems. And it's about new products, new offerings, things that you could not do with, legacy, quote unquote, legacy systems that you could do now with blockchain systems, and also like commercials. Like that's kind of the bottom line. Like as interesting as blockchain is, there's the commerciality that drives all of us, right? And so, I think especially, from our seat at Apollo, we have fantastic partners that are in the audience. Like we're always trying to push the envelope to try to understand, how do we give our assets superpowers, right? Like it's not like, oh, let me stand. How do we give our assets superpowers, right? Like it's not like, oh, let me just, put like Apollo private credit on chain and hooray, now you can access the same exact thing that you can access off chain, maybe even easier. But this is why, we spend an enormous amount of time with our partners exploring DeFi. Because, for example, in one of the pioneering projects that we did with Gauntlet, on Morpho, essentially what we were able to demonstrate was what the Gauntlet team and Securitized team did was actually enable Apollo private credit to be used as collateral in a Morpho DeFi borrow lend protocol, essentially enabling Apollo private credit holders to post their ACRED position, borrow 50% LTV at I think at that time, Ro, keep me honest, it was like a 1.5% cost of capital. Now it's like 4%, which is still pretty good. Basically enabling people to enhance their returns from 7% to 15%. Now,
okay, so a few takeaways. She talked about how they are focused on giving digital assets the ability, superpowers. They're focused on providing DeFi solutions and primitives to their clients. And she specifically mentioned one of the key things that we've fixated our attention on in this community is there going to be double-digit yield in the future? And she just said that they offer their clients the ability to enhance their returns from 7 to 9% to 15%, y'all. That is crazy work right there. Crazy work, and something that we have never, ever seen in traditional finance, but will become the new normal in this new financial era. right? So as we progress, now let's come over here to this gentleman here, McBrennan Pete. He is the founder of Project Zero, which allows you to borrow against your entire DeFi portfolio. So if you guys remember in yesterday's call, I don't remember, like I said, who it was that had asked me, like, isn't it a smart idea to not just have all your eggs in one basket and instead have maybe like $500,000 in stablecoins spread out between different lend borrow platforms or different liquidity positions. So that way you're not risking smart contract risk or exploits on just one single platform. And we all agreed that that was like a really smart thing. Well, this project literally allows you, if you are diversified in different lend borrow platforms, to condense all of your positions and then borrow against all of your already lent out positions on other platforms. So we're going to read the documents. We're going to get into this project. But before we do that, and I introduce it to you guys, I want you guys to just listen to these gentlemen's conversations. Shout out to the Crypto News Spotlight for this podcast with this gentleman here, the founder of Project Zero. Listen to what he says about how the rich don't sell their assets, which is the exact mindset that we've been trying here in the Wealth 28 Club to install into people. That if you actually study what the rich and wealthy do, and you're not ignorant and think that you're going to become successful by selling your crypto for fiat long term, fiat, again, a decaying, dying currency that depreciates and devalues at 3% value every single year, year after year after year, you understand like the accumulation of these assets and holding them long term. And then once they appreciate in value, lending them out, borrowing against them is how we're all going to survive in the long term, is exactly what the rich and the 1% are going to do once they come into this new digital asset ecosystem. So just take a second here. I want to play that. And then I want to also play a video clip right after that where he says, this isn't for the rich and wealthy anymore. This is now going to be available for every single person, no matter if you have $1 million or if you have $10, right? So just take a second here and listen to these couple of video clips.
Nope. I don't know one person in crypto who wouldn't use this unless they never ever want to, lend and borrow against their portfolio. In TradFi, this happens all the time. Right. And I'd love if we could jig and jag a little and just perhaps tell the listeners, and you have experience in this. Yeah. I didn't really know this up until probably 5, 6, 7 years ago about how the rich get richer. They half the time they don't even pay themselves a salary, right? Or they don't ever sell what they have. Their assets just keep growing and they borrow against the value of those assets. Like this is what you are doing for crypto. And crypto is the new reach. A lot of people are getting very wealthy in crypto, and you are literally providing a solution to, yes, people use this before, but it was a siloed solution and it was very extensive, and now it's just a couple clicks, boom, you're dancing. So walk us through how this works at TradFi as well, because I think this will really help the listeners understand this better.
Yeah. So there's a bunch of different exchanges. For example, in traditional finance, there's like the NYSE, there's the NASDAQ, there's the Chicago exchange, there's the Hong Kong exchange, there's the Tokyo exchange, etc. And yes, for these like super wealthy guys in TradFi and gals, they typically have a diversified portfolio. So they usually are holding equities, commodities, some debt instruments, etc. And you tend to get these across different venues, different exchanges. And so what they do is they call up their prime broker, which is usually like one of the big banks in this case. And this bank sort of helps them collateralize their position across all these different exchanges and borrow against their whole portfolio. Basically what Project Zero does for DeFi. And that's like one example. Another example is maybe some trading firm is running like a trading strategy where they utilize spot, and like maybe they're like trading the underlying spot price, and they're also trading like the options on the options exchange in Chicago. And these are positions that need to be like combined to get like the best margin, the best like portfolio health. They'll also do this like through a prime broker, through a prime brokerage system. So it kind of like facilitates all ends of the traditional finance spectrum, from like high frequency trading to just your, rich uncle calling from his yacht in Italy, for his like diversified portfolio. But like the really cool unlock here is the people I'm talking about in traditional finance, like these are well capitalized players.
Yeah.
You never hear of, some like typical middle class family calling up their prime broker. That's not a real thing. Like,
No.
this is not tooling that's available to you unless you literally have like a certain net worth, or like you're managing a certain amount of like assets. The really cool thing here is that like anyone can use this in DeFi. So this is no longer like some gated tool to, the ultra rich. This is like for anyone. You can kind of act as your own risk manager. You can access the DeFi venues you want, and you can get unified capital efficiency against it. So.
All right, so I'll pause right there. You guys heard exactly, pretty much reiterating everything that we've been stressing. One thing I will pay attention to that he said is you have to act like your own risk manager. And what does that sound exactly like? Something Kev and Aqua have been constantly saying to you guys in their calls. Do we have the maturity in this community and as individuals and as sovereign beings to be our own bank, right? Actively manage our risk, control our own portfolio, diversify in things that were previously unavailable to us. This is all happening for the first time ever. And the best part about all this info that I'm showing you guys is, out of the 3 videos that I just shared with you guys, even the one with Naheen, whatever her name is, from the DTCC, all of these videos combined have less than 1,000 views, you guys. This video of Nadine only has 464 views. This one from Christine Moy, 35. This one, 28. And this one, 93. Come on now. This screams to me we are in the right place. We're not focused and paying attention to what everybody else is focusing their attention on, which is what makes me so ambitious about DeFi, because nobody is like aware and awake to the fact that you can accumulate these digital assets, benefit from price appreciation, and never have to sell them, and just constantly have upside exposure. And if you need money, if your life calls for it, right? You have an emergency expense, you have debt you need to pay off, whatever it is, you don't have to sell your positions that you've worked so hard to swap your fiat trash for these currencies. You can just go lend them out, borrow against them, boom, pay your loan back, get your assets back, stay in the crypto ecosystem, right? Last thing that I'll play for you guys here is Christine Moy spitting out pretty much exactly, not last thing I'll play. I have one more video clip after this one, but the gentleman just mentioned that this isn't for just rich people anymore. This is for everybody. And on stage, Christine Moy specifically breaks this down in terms of portfolio size. Listen to what she says here. This aligns with exactly what the gentleman said. And then keep in mind that Christine Moy said that their focus is on giving digital assets superpowers, right? So take a second here and listen.
Actually, in crypto wallets, like what's happening today that people aren't really talking about is that there's actually conflation of bank accounts and investment accounts, whereas, in the regular world, we kind of keep them separate. And so, and I think that if there was anything that we've learned about smart contracts and DeFi, is that smart contracts are incredible rebalancing like different types of assets. It's just that to date, it has been like different types of crypto assets, which, are all part of your existing diversified portfolios. But in the future, and talking about expanding access, talking about like, let's say the depositors of Tether, like in the future, you can have like an expertly designed, diversified portfolio composed of, stables, treasuries, AAA, CLOs, private credit, equities, designed by an expert financial advisor. Could be like your classic, like Morgan Stanley, UBS, could be, your next generation vault curator. And essentially, regardless of if you have millions of dollars, thousands of dollars, hundreds of dollars, or tens of dollars, you will still be able to have a really well-designed, yielding and fully invested portfolio just for you, just at a click of like your crypto wallet. And I think that's like really incredible. Like, when we think about how do we, at Apollo, like our main mission, I know this sounds really cheesy, is like to help people save better, to help people retire better. I know all of you young crypto people are like, literally, like, what are we retiring for? Maybe early retirement.
They're all retired.
Yeah, you invested in like your Apollo product. But like, basically, like in the broader world, like, why do we do what we do? We generate alpha, we create yield so that people can take their savings and live off of it really well and retire off of it really well.
Boom. She literally just said exactly what we had discussed yesterday, that everybody's goal after this next bull market cycle should not be to just pay yourself in profits. It should be to freaking retire off of the passive income that your portfolio is generating for you. I don't know how else to show people how aligned we are with what the banks are focused on and not what the retail crowd is focused on, which is some high price that may or may never happen. But wow, this is such good, juicy information. So shout out to the CYPRX researchers for all those recent panel discussions that they have shared in the research channel. Now let's play this clip and get into the project, Project Zero. So listen to this gentleman here, the co-founder or founder, I don't know, of this project. Again, I need to look a little bit more into it. I've only scratched the surface in terms of the research that I could do on this project because I wanted to present this to you guys as fast as I just found out about it. So just take a second and listen to him talk about what this project does for anybody that attempts to use it.
That's the requirements for that. And that being said, crypto is obviously like multi-chain, and you can't ignore how well Hyperliquid's doing. You can't ignore how dominant like Aave has been.
Yeah.
And there's a bunch of examples like that. And so we can still unify your collateral on these exchanges. So like in a very tangible sense, that means like if you now have $100 on Aave and $100 on Camino, like two different borrow lends on two different chains, you can borrow against a $200 portfolio still in one click through Project Zero.
Right. So that just gives you a little glimpse into what this project allows you to do. Is it allows you to pretty much condense all of your it allows you to condense other lend and borrow positions onto this protocol and actually borrow against those positions in one position. So let's dive into this. Let's read thoroughly through some of these recent documents. This one's from September 14th, 2025. And it reads, Project Zero, the first DeFi native prime broker today announced its official launch on Solana, serving as a trustless prime broker for decentralized finance. Project Zero addresses critical capital inefficiency issues that have long plagued the DeFi ecosystem while unlocking unprecedented composability across multiple venues. Traditional finance lending protocols operate in isolation, requiring users to over-collateralize positions separately across each platform. This creates significant capital inefficiencies and prevents users from leveraging their complete portfolio when managing risk or seeking liquidity. Project Zero fundamentally changes this dynamic by unifying fragmented markets under a single portfolio management risk system. McBrennan Pete, founder of Project Zero, commented on the launch saying, "The crypto industry has a hyperfixation on reinventing existing working applications. The Project Zero team is committed to pushing the industry forward. Today's launch marks the first time users can borrow against their entire portfolio across venues like Camino, Drift Institutional, and Jupiter with unified margin. This eliminates the frustrating scenario where users get liquidated on one platform despite having offset positions elsewhere and fundamentally overhauls the DeFi trading experience." Now, I'm just going to go outright and assume that in the future, they're going to add more platforms and more protocols to their capabilities. But right now, we're going to dive into some of the positions, specifically focusing on stablecoin positions that you can launch on some of these other protocols that then you can go and use Project Zero to condense in all-in-one position. So coming over here, looking at their docs and just kind of reading thoroughly through it, I'm not going to detail and read everything, just some of the key highlights that I put for you guys. So looking down at the unlock section, it says, Project Zero allows you to use Camino, Drift Institutional, Jupiter, and other DeFi venues as a single portfolio with unified credit. This is not a dashboard. This is not a lending aggregator. This is a true uni-opinionated DeFi prime. That is a huge word. If you have $100 on Drift, if you have $200 on Camino, and if you have $300 on Jupiter, you can borrow against your entire $600 portfolio in one click on Project Zero. So I'm thinking about exactly what we talked about yesterday, where if we have $100,000 lent out on one platform, $100,000 earning yield on another platform, and $100,000 earning yield on another platform, then with Project Zero, we can go in and we can borrow against $300,000 with Project Zero, while the other platforms are earning yield on their specific designated platforms, right? This is mind-blowing stuff right here. And remember, this just launched in September. So I am going to give it some time to mature. I'm not going to deploy on it yet. I'm going to show you guys some strategies that I'm starting to formulate and think about in my head. And I will definitely let you know when I go out and I start to drift in to some test positions, which will probably be in like maybe a month or so, right? But it goes on to read. Your PO portfolio gives you superpowers. Look at that key vocabulary word right there. You guys remember what I told you all to focus on when Christine Moy was speaking? She talked about how we're in this process of trying to figure out how to give our digital assets superpowers. And look at that key vocab word. It couldn't have come at a much better time. Your portfolio gives you superpowers across the activity you're already doing on the venues you're already using. You can finally set up a delta neutral position between drift and Jupiter without getting liquidated if markets move one way. You can finally hedge holdings on drift and Camino without having to manage two borrows from two different venues with two different sets of rules. You can run cash and carry trades. You can run perp funding, rate arbitrage, or set up yielding hedge positions across multiple different venues with unified margin. Or you can just try to hunt for yield across venues and be able to borrow against your entire portfolio whenever you need it. By managing your DeFi portfolio through Project Zero, you get better risk, better rates, better capital efficiency, and better user interface. You don't need to stop using the venues that you already love. In fact, you don't need to change anything. You don't add any additional smart contract risk by using Project Zero. Project Zero just inserts a self-custody account in between you and the underlying venue that you're already using to enable deleveraging, protecting solvency. If you use more than one DeFi venue, which is 99% of DeFi users, you have worse capital efficiency by not using Project Zero. To reiterate, through Project Zero, DeFi users can finally, for the first time ever, borrow against their entire portfolio. This will start inclusive of their assets on Camino, Drift, and Save, and will soon be more like their perp position on Hyperliquid, their JLP position on Jupiter, their lent assets on Loopscale, their yield token on Exponent, and their assets on Project Zero markets, all in one click with unified global margin. Passive users in search of yield now have the ability to loop Camino USDC with PO USDC. We're also launching powerful automations that will enable multi-venue yield strategies with an accurate understanding of portfolio-wide delta across all independent venues that you are using. So lots of juicy information to dig into. I will make sure to drop all these links so that way you guys can thoroughly read through them yourselves and educate yourselves on this platform. But let's just dive in and take a look, right? So here's the platform right here. This is their homepage. All right. So just going through, you got the launch app button. We'll get into that in just a second. You can see here it's backed by Solana Ventures, Pantera Capital, Multi-Coin Capital, One Portfolio, Infinite Strategies. Reading some of this, it says, Project Zero allows users to use Camino, Drift, Jupiter, and other DeFi venues as a single portfolio. And it reiterates, if you have $100 here, $200 there, $300 there, you can borrow against your entire $600 portfolio in one click with Project Zero. Traders can run cash and carry trades. We already went over that. Project Zero inserts itself as a self-custody account in between you and the underlying venue. So again, there's zero counterparty risk. There's zero smart contract risk there. Keep using the venues that you already love, so you don't have to get off of Aave. You don't have to get off of Jupiter or Drift Institutional. All these platforms that we've already previously talked to and engaged with, or talked about and engaged with, we can stay on them, and now we can condense positions on this one project out of all the positions that we're already operating in, right? Coming down here, it talks about being audited, open source, stress tested countless times. It gives in the detail on that in their documents. Clicking on the launch app button, all right? Once we go into the launch app, this is what their user interface looks like. I have not clicked around thoroughly through it yet. One thing that I would like them to add is a dark feature because I can't stand this white light. If you guys find one, let me know where it's at, screenshot it, and I'm definitely changing my stuff to dark mode. I'll save time. I'm not going to click around on this. I just want to briefly talk through the strategies that I'm starting to think about before this video takes too long. Coming over here as well, make sure that if you guys want to follow them, you're following the correct Twitter profile. Their Twitter handle is at 0.xyz, Project Zero. They have about 5,400 followers as of time of recording. And they do have a gold check mark. Now, coming over here and taking a look at some of the platforms that they allow you to condense your positions on. So think about this. Remember the other day we were talking about having $100,000 on a lending platform earning here, another $100,000 there, another 100,000 there, or in some people's cases, it might be a lot less, $1,000 here, $1,000 there, $1,000 there, just to be diversified. Well, check this out. On one of the platforms that they are integrated with is Camino. If you come over here to the Lend tab on Camino, you can see right now USDC Prime offers 10% yield via a lending position on USDC. So again, let's say hypothetically speaking, in the future, we see a massive bull market cycle, you secure some profits, boom, here's one of the platforms you can lend out some stable coins to and earn 10%. They also have Centaur PYUSD, which offers 12% yield, which is just another stable coin. They have Ali's USDC, which offers 13% yield. So just to give you guys some options there, they have Stakehouse USDC High Yield, 15%. They have Cash Earn, which is a brand new feature via the Phantom Wallet announcement and the new stablecoin that Phantom Wallet just announced in their Phantom Cash Wallet that they just announced that we put in the Discord the other day. Well, maybe we'll briefly go over that as well. But 12% on that, right? So again, we're looking at those double-digit yield opportunities, and nobody here should be skeptical on double-digit yield opportunities because we've already had an asset manager with $700 billion AUM say on stage, look, y'all, that's about to be the new normal. These looping strategies, these DeFi strategies with double-digit yields are going to be the new normal. So this is very encouraging. If we come over here, so let's say $100,000 is sitting on this platform. You come over here to Jupiter. Here's another lend borrow platform. You go to their Lend tab, click on Earn, and you come right down here and you can see an 8% APY on a USDC position. You got USDT at 7%. These aren't anything substantial, but imagine if you have $100,000 sitting here collecting $8,000 a year. You have a position over here, another $100,000 collecting $10,000 a year. That's 18 grand right there off of 200K. Then you come over here to Drift Institutional. Same thing. You go to their Earn tab, you go to their Lend feature, and you come right down here and you can see you can earn another 8% on USDC on a lent out position. They even have EURC operating at a 10% yield. Still high-end single-digit yield for just stablecoin positions, maybe after this next cycle. But think about this. In addition, you add Project Zero. So you have $100,000 on Drift, $100,000 on Jupiter, $100,000 on Lend on each platform. So that way you're diversified and your eggs aren't in one basket. But you want to borrow against that $300,000 investment. You condense it all in Project Zero and boom, you have capital efficiency with your whole $300,000 portfolio without having to put everything on one protocol. This is honestly game changing. Again, it just launched. So before I engage with it, I'm just going to give it some time. We're definitely going to attempt to see if Carlton can run a security check on it, make sure everything checks out. Its TVL looks relatively solid as of right now. If you come down here, I don't remember where it was at. Where was that? Was it on the home page? The gentleman talked about how much TVL is already on the platform. There's like an upwards of $200 million already in TVL on this. So yeah, just again, I wanted to introduce this to you guys because we're entering into this era where these types of strategies and this type of thinking is going to matter. Now, again, just to be transparent with you all, I'm not deploying on this yet. I'm not using any of these other protocols yet as of time of recording, but this is definitely something that I'm keeping on my radar in the near future for tutorial video breakdowns, for how-to video breakdowns on how to deploy and utilize this platform as time progresses and as the ecosystem matures and as these projects are solidified and proven as we continue to mature in this ecosystem. All right. So that's it for my spiel today. We can have the floor open for any questions, any commentary, or any of your guys' thoughts. But I just wanted to introduce this to you guys because I found out about it just yesterday, going to the CYPRX research section and listening to this gentleman speak. Completely aligned with everything that we have talked about in previous calls, not only in the private community, but also to the public about how the wealthy don't sell their assets. They accumulate assets. They benefit from price appreciation. If they need cash, if they need liquidity, they borrow against their assets. And that's the future in which we're headed into with DeFi and crypto. All right. So that's my spiel for today. Hopefully you guys enjoyed this quick, brief breakdown. Instead of doing a fundamental backdrop today, I chose to do a DeFi related topic call. I'll leave the floor open for questions, open commentary, your thoughts on this. And yeah, have at it.